This dial tracks the crypto market's current fear index. Right now, it is sitting at a reading of 12, putting sentiment in a state of extreme panic. In this environment, the retail market has effectively frozen. That fear is tied to a specific macro backdrop. Geopolitical tensions in the Middle East have sent crude oil past $110 a barrel, driving a broad retreat from risk assets across the entire financial sector. For this asset, those pressures led to a 50% price crash in just a few months. That scale of decline has pushed the majority of everyday retail investors to the sidelines. On the surface, the data shows total market capitulation, the kind of environment where you would expect to see capital fleeing the space entirely. However, look at the divergence in this chart. The red line tracks the 50% price drop, but the green area beneath shows $1.44 billion in cumulative ETF inflows. This wasn't a one-time spike. We're looking at an unbroken streak of 32 consecutive trading days of net inflows, even as the price hit new lows. Retail traders do not typically buy an asset every single day for a month while its value is collapsing. This is a textbook market divergence. It suggests that a specific type of capital is looking past the current price action and accumulating supply based on a different set of metrics. To identify those buyers, we have to look away from the exchanges and look at the Senate Banking Committee, which is currently negotiating the details of the Clarity Act. In mid-March, we saw a rare alignment between the SEC and the CFTC. The two agencies issued a joint classification framework, providing the first clear evidence of a unified regulatory roadmap. The Clarity Act codifies that framework. It moves the asset out of the legally contested security category and provides an official designation as a digital commodity. This shift changes the compliance math for traditional finance. A digital commodity designation provides the specific legal permission that allows national trust banks and institutional wealth managers to hold the asset on their balance sheets. The timing of the 32-day buying streak aligns with the public emergence of this joint regulatory framework. Because this capital is entering through professional fund vehicles like Grayscale and Bitwise, it indicates that institutional buyers are positioning for this legal shift, while the retail market is distracted by macro volatility. This process is what we call the institutional handover. It is the mechanical transfer of supply from retail portfolios, which are liquidating due to geopolitical fear, into institutional vaults that are buying based on long-term regulatory certainty. There is a specific window for this to finish. The Senate Banking Committee has targeted late April for a markup session, the final credible deadline to move the Clarity Act before the upcoming midterm elections stall the legislative process. There is still friction, specifically a debate over stablecoin yield restrictions that has split the banking and crypto industries, but the underlying data suggests the transition is already happening. The asset is being reclassified by the market from a speculative tech play into a regulated financial instrument. Let's translate this legislative timeline back into a live trading chart. Because of the broader market, but it hasn't yet translated into the token's exchange price. The chart shows a specific technical ceiling at $1.49, where retail sell orders are concentrated. While macro fear remains high, the price cannot break through. Every bounce is met by retail traders exiting their positions to cash. If the Clarity Act successfully moves through the Senate committee, the sustained institutional demand we see in the ETF data has the weight to finally absorb those remaining retail sell orders at that ceiling. The macro noise will continue to dominate the headlines, but the story of this cycle is the supply transfer happening in the background. When the price definitively clears that 1.49 resistance, it will be the indicator that the institutional accumulation we've been tracking has finally outweighed the retail panic. The handover will be complete.